Good morning, everyone. Welcome to this Monday, January 13th. And we had a weak close Friday. Employment situation had the reaction on the good report was weak. Selling going into the weekend started off with a bias to the downside, and yeah, so far it has been kind of kept going. So the overnight has been to the downside for the selling, for the weakness. And we'll see how far they're going to take it. So definitely we're in a in a pretty good shift of momentum. This is not longer a pullback just from the highs from the Santa rally. This is still a bit of a sell-off going on right now. The news this morning is pretty anemic. Nothing is really going on. No news this morning. However, tomorrow we get the PPI number, and we get the small business optimism. We get the PPI number, and that's about it for tomorrow. We get CPI on Wednesday, a bunch of Fed speakers as well, a ton of them. In Beige Book, we get a bunch of stuff, jobless claims, retail sales coming out on Thursday, housing starts permits, industrial production coming out on Friday. So PPI, CPI coming out this week. They get the inflation read, and let's see if the bond market has been right about concern about inflation. That's why one of the reasons they are selling off, or the bonds are selling off and the yields are popping higher. Also, starting Friday, earnings, bank earnings, I believe, comes out on Friday, and then we started like a 2-3 week intense earnings season, and well, it drags out for a bit, but it's going to be definitely right into that earnings season. See how that part is going to play into this. So it's going to be an interesting January for sure. Definitely starting off with a little bit of weakness. So looking at the ES, just diving into this. I mean, we still have like the prior administration is still in charge until the 20th, next Monday, and then things could start changing. We'll talk about that when we get to oil. The reason oil has been creeping higher. We have a pretty good explanation to why that's going on right now. But anyway, so we were down here at that 58, 60, 70s. Remember this area, we were up in this 50, what was it, 6,015 area to 6,035. That was an area of pretty good resistance. And we were down trading in this lower range for a bit. And Friday, we got that move out of the middle to the downside. So we've been holding on pretty good until Friday. Now we were down here testing that lower edge at the 58.70s, and that took that out. And then we get continuation. So now bets are off. We are heading lower. And the question is just where. So capital flow is pointing us lower. The next levels down, we are at support right now at the 5800 level, roundabout. We have an attractor here at the 5770. We have a good support area at the 5720. So that's the area, the structure ahead of us. And if they start retracing, reverse retest of 5860 to 70, that will be an area to get short against, rotations back down. And then that's kind of the dynamic we are in right now. So in the bigger picture, we are pointing lower, and let's see how far they can take it on the downside. So starting off, bias to the downside, looking to sell strength. At this point where we are right now, looking to get short against that 58.30s, the 58.45s, 58.55s, 58.65s for rotations and back down. If it starts trading above that 58.65, so that's your reverse retest. This guy right there, so the back up here gets 58.65s. That would be the high of the overnight. So here's your range. If they start taking out the 65s and starts trading above it, I think we have a shot at retracing. But today I'm not getting the sense that that's going to happen today. So if the bargain hunting would have probably started off Friday already and closed us a little bit stronger than it did. So Friday was a pretty weak close, and that sets the stage for what's going on right now. So pointing it lower, let's see how far they can take it. The attractor, as I said, is down at the 57.60s. So that would be, if I scroll this down a little bit, it's going to be down in this area right here. That's going to be your attractor point. So we are right smack in the middle of this stuff. But as I said, look to sell strength. if this starts trading above the area at the 58.65s, I would start looking for a retracement trade to the upside. But at this point, we're going to get short against these upper areas of resistance for rotations back down again. And then let's see how if you get any early strength at all, you know. Usually after you take out the London, you can London, if you take out that London high, you can go back more range bound. I would be not that aggressive on it at this point. This feels pretty weak. So but if it's I would still be looking for short opportunities. Not going to be super aggressive on the long side. There could be long trades between these guys. You will run from the 30s up to the 60 or 30s up to the 45s. Could be long trades in that kind of setting. But I would not be very aggressive on those. I would be looking for short setups for rotations back down. That kind of the dynamic I'm looking for. And it's been pretty volatile in the overnight as well. I mean, look at the volume right now is I got 212,000. That's usually twice the size we usually get in a regular overnight. So pretty busy overnight. So volatility is there. So that's how we get started on the ES this morning. Looking at the Nasdaq and the bonds, and so the bond market is the one, I think one of the big components of this. Fear of inflation, bond market bonds are trading lower, and yields are going higher. And that is in light of the Fed lowering rates. So the Fed is getting just smacked around the, you know what, because the idea was to lower rates and the rates dropping, right? It's just the reverse. So the bond market is not at all playing ball with the Feds. And we were down here at the 111s, testing that in the overnight. It had been down a couple of times. And so far they're holding the 111s and they bounced back up again from there. But it doesn't look very strong. So I'm looking for short setups against the strength. We could get all the way up here to test these two single prints, but I would be looking for short setups against the 1114s, 19s, 25s. Watch those two single prints at 26 and 27. Could be nice short setups against those for rotations back down. If they trade up above the 26s, I'll take off that short bias and go back a range buy, at least for the trading day. But that's the bonds, and I would not be surprised if they take out 111 and starts pushing lower. At this point, the yields are definitely on the rise. And that's going to be headwinds for the market. It's going to be headwinds for future cash flows and so on and so forth. So pretty interesting start, right? Started off with a few days of selling right in the beginning, and then a nice little rally in January, a few days, and then now we're getting a little bit more of that selling. So that's how it goes. Nasdaq, big move to the downside on the Nasdaq. So a lot of companies getting creamed there. So at this point, the attractor we have is right down here at the 20,630s. That's the volume attractor. That's where they're heading right now. The attractor at the 2800s, that's where they are. We thought it was going to go there Friday. We never kind of got there. Now they got there in the overnight. And so right down to that attractor 800, overshoot it, starts trading lower, and then we start retracing from there. So at this point, pretty much range, no, not range bound, but funded lower, but we are back up at an attractor right now. So looking at selling strength for rotations back down, and at this point getting short against the 860s, the 2900s, 940s, 990s, 2100s for rotations back down. 2100s gets us up to the that reverse retest. And if that comes out, I would start thinking about retracement trade to the upside. But there's plenty of range to the upside. That would be a pretty spectacular rally to kick in if that's going to happen. So not quite believing that's going to be a possibility for today at least. So I'm thinking lower prices. We have an attractor down here at the 2400s. We can maybe even go down right all down here to that to 20,000 and test that level. We get that far down as well. Now 10% on the Nasdaq is from the high is 22.3 to about 2,200 points. So that would take us right down to the 20,000. A 10% pullback would take us right down to the 20,000 level. So that's kind of the dynamic we have potentially in front of us. So the 10% pullback in the market. I mean, we've been rallying pretty darn hard going into the Christmas holiday. So it's would not be surprising at all. But we are pointed lower. So structure is pointing lower. Watch that level at the 990 to 2100s. That's the level which potentially could take you back up again. So if they take that out, at least we have a shot at trading back up again. So not going to be very aggressive on buying anything at this point. Looking to get short against strength. Buying support at this point, I'm not going to be very aggressive on it. There could be buying opportunities on the way down on support. The best one would be at 690, but the way this looks, I will be a little bit less aggressive on it. If I do a long trade, it would be more of a scalp, a short-term type of a trade against the intraday support area. But it's not looking for any big trades on the long side at this point. There could be trades between the areas if they start getting some early strength, but as I said, not going to be super aggressive on those. So pointed lower, looking to sell strength on the NASDAQ at this point, 860s, 900s, 940s, 990s, up to the 21,040s. And this upper area, 21,000, is where you find a pretty good resistance. All right, so that is NASDAQ. Looking at oil and gold. And that's an interesting one because you have oil. Let's start with that guy today. You can see oil traded high popped in the overnight. And this is interesting because remember early on when the Russia-Ukraine thing started, they were all concerned about adding these sanctions on, they were adding sanctions on oil, but nothing was really happening on oil prices. Well, going out the last week in their administration, last week, 2 weeks, now they're adding sanctions would actually create some problems, and they're just doing it to, I guess, blow up the whole situation. So there you have it. That's spiteful, vengeful, and that's just I just call BS on that. So yeah, so that is sanctions put on by Biden administration in the last days on Russia just to create the problem. Go for the incoming administration. Because if they really wanted those sanctions and really wanted to hurt Russia, they would have done it already earlier on. And but the fact that the oil prices is spiking like this is the stuff they tried to avoid to keep the oil prices low in their administration. So that just tells you how much garbage these people are all about. So oil prices going up due to that, and hopefully that's going to be short-lived as they come in and drop that stuff down and start resolving the situation instead of playing with politics like that. So I would trade it from the long side, looking to buy weakness at this point, but I would take it with a lot of caution because you never know when you get a headline come out or something like that, which sends this market in up or down. So you can either watch it and be nimble about trading oil. But at this point, the way it goes, still, I would be looking to buy weakness at this point against 77.40s, 77s, 76.50s for rotations back up. And that's about it. Below 76.50s, I would take off the long bias, go back more range bound. And I think the oil prices here is going to drop like a rock once they come in and change things around and change policy on pretty much everything these other guys has been doing. And maybe we'll get back to energy independence again, the way it should be, right? That should be pretty good, pretty nice. Anyway, so that's oil. Look to buy weakness on oil. Yes, be very cautious trading it, given what all these cross currents going on on the geopolitical scene. Gold, big move to the downside. It spiked pretty good on Friday, and now they're reversing that all the way right back down again. Looks to me like they're heading right back to the 2670. So I thought for a while that gold had a shot at going higher, but looking at the structure right now, you can see Friday's trading, they took out that 4 little edge at the 2720s. They were on the way up, and they closed pretty good as well, closed pretty strong. They held that 2715 level. They did not quite retrace past the support area, and Now in the overnight, it absolutely fell apart all the way back down. Chances are they're heading back down to 2670. So I would look to trade, look for the reversal back to the 70s. This could potentially be a reverse retest of the low here from Friday at the 2685s. They will have been out to the 82s. They could be, in which case you'll see them start retracing this hard to the upside. So gold could certainly go either which way. So I would hold out judgment just a little bit in the morning to see which side they're going to go on. But if they start taking out that 80, 82s, look for a rundown here to the 70s or potentially lower. So we have these two support areas, the 87s and the 82s to lean against. And right now they bounce off 86, looks like, trading back up a bit, but they can certainly retest this low, maybe even take it lower. So watch that lower edge. If that comes out, I think the reversal gets confirmed and we are heading back to the 70s. If it holds and starts trading back up, we can certainly retrace right back up again. So it seems like we might be in for some volatility in gold as well. Now, remember, we roll gold to the April expiration in a couple of weeks. So I'm not sure that has anything to do with this right now, but it just so you know. But you can see pretty good moves and a lot of volatility on gold. These are pretty good sized bars moving back and forth. So I have to trade that with a little bit of caution as well. All right, so gold, trade that. Look for retest of this low, the support areas at the 86 and 82s, and if that holds, potentially retracement back up again. But I would start off by looking for early weakness. So initially looking to sell strength at in 97s and the 2700s for rotations back down. But above 2700s, I think they're starting to retrace at that point. So that's kind of the dynamic I'm looking for. So a little bit of early strength, looking for short setups, but not very aggressively above 2700s. And if they start heading lower, looking to buy against 86 and 82 with a bit of caution. If that comes out, they're heading down to 27 or 2670. So gold, interesting dynamic on that kind of going on this morning. So that's oil and gold. Back to the ES, and so far, well, a little bit of strength right now. Let's see if we can get some more early strength on the market. But as I said, structure is pointing lower on both ES and Nasdaq, and it would require a little bit of an effort for them to turn this around. But I guess they could potentially do it, but I'm not going to count on that today. And we'll see how this week shakes out. Alrighty, guys, we'll wrap it there for now. So good trading, and I will see you back at 11:30 for the next update later.